Good morning and welcome to this weekly market update from AGM Markets. Thursday, the 3rd of June 2014. What we'll do today is go through some technical analysis on Euro Dollar, Cable, Dollar Swiss, Aussie and Gold. I will not be making any trade calls recommendations in this video. You trade at your own risk. If you could please read a full disclaimer on our website, which is www.agmmarkets.com. That will be appreciated. For any new followers out there, we have three moving averages on each of these charts. The red one is a 50 simple moving average, the purple is a 100 simple, and the gold is a 200 simple moving average. Okay, then let's quickly have a look at the Forex calendar. There's lots of data coming out this week. We're doing this video on a Tuesday, so we already had some data come out yesterday. I'm just going to just go through the main highlights. Really, I won't go through all the high impact stuff because there is a lot. So yesterday we had UK manufacturing PMI at 9:30. It came out pretty much in line. And at 3 PM we had the US ISM manufacturing PMI. That initially came out weaker, but then there was I think there was a slight incorrect figure just on the Forex factory. Yeah, that was it. So the source has corrected the actual data 150 minutes after the release. So a bit of confusion. I haven't seen that for a long time. So yeah, it initially came out weaker, and then they corrected the figure. So dollar caught a bit of a bid at the end there after the initial weakness. Today we've already had some overnight data from China and Australia, retail sales from Australia, and the HSBC manufacturing PMI pretty much in line. And then we've had the Australian cash rate sales that came in as expected. The main highlight for today, you've got UK construction PMI out shortly, so that's in 22 minutes time. And then at 10 AM you have the Eurozone CPI flash estimate year on year, that's expected to stay the same at 0.7%. Tomorrow, Wednesday, overnight we have the Australian GDP. At 9:30 you have some more UK data, so the UK services PMI figure. It's the first day of the G7 meetings. At 1:15 PM of the US ADP non-farm employment change data. At 1:30 you got Canadian trade balance, US trade balance as well. At 3 PM more Canadian data, so you got the overnight rate, the Bank of Canada rate statement, and US ISM non-manufacturing PMI this time. On Thursday, more Australian data overnight, and this time it's the trade balance, and then it's got the day 2 of the G7 meeting, so keep an eye on any news on the wires there. And at 12 PM it's all about you got the UK, the official bank rate, you got the MPC rate statement, asset purchase facility, and at 1:30 it then goes to the Eurozone, 12:45 sorry, it changes to the Eurozone, so you got their minimum bid rate. Number forecasted to drop as well from the previous 0.25% to 0.1%. So big lows there for the Eurozone. At 1:30, you've got Canadian building permits in the ECB press conference. That'll be very interesting to watch. That should be very volatile there for Euro. And then you've got weekly jobless claims from the US at the same time. At 3 PM on Thursday, the Canadian IV PMI. And then to round off the week, 1:30 you've got Canadian employment change and employment rate. But of course the main highlight of the week, well apart from Thursday, really, is the sort of cherry on the cake for the week is the US non-farm payrolls data. And of course it comes at the same time as the unemployment rate. So a hell of a lot of data this week, pretty much all the big data in 1 week here. So should be some big moves. But of course, just because one bit of data, maybe on Thursday, for example, doesn't mean it's going to determine the rest of the week. I mean, non-farms can just change everything. So keep that in mind. But okay, let's look at the technicals now. So it's the Euro-Dollar weekly chart. Let's have a brief look at this. What have we been speaking about for the last few weeks since we formed this this double top up here? It's just been continuing to slide down. Interestingly though, last week there's a bit of indecision in the market, pretty much a doji candle there. So we could get a brief bounce this week potentially. If we're going to get a brief retracement, then it could happen this week, and that is of course the fid that we'll look at. If we do get any sort of bounce up, and that 50% is coming in at 1.3790s there. But of course, we've still got to come down to the moving averages. I think at some time or another. So keep an eye on that 50-week moving average there. But in terms of this week, I'll not be surprised to see it get a brief bounce up, and of course it could continue to slide. But if we're going to get some, I mean, we have had 3 sort of heavy weeks here in a row, and last week a bit of indecision. So don't be. It's already sort of posted a bit of a lower wick there, so don't be surprised to see it get a brief sort of bounce off of this 136. This is the sort of current level that we're sitting on at the minute. So we could get a brief support and a pop up on this euro this week, and that's just the context in terms of the weekly chart. I mean, in terms of the next sort of fib, if we get any quick sort of sell off over the next few weeks, that's the one to keep an eye on, I think. But anyway, we're a long way away from that. So in terms of shorter term charts, we flipped it to the daily here. In terms of the fib, we just spoke about this fib move here. That's the one to keep an eye out for if we do get any bounce, and of course the moving averages sort of lining up there as well. But in terms of the levels, it's all about this sort of 136. That's the key sort of line in the sand at the minute for euro. You can see we've just been chopping around that for the last sort of few days, really. And in terms of the 4-hour chart, it's pretty much it, to be honest with you. In terms of the support, yeah, you got this lower support around here, so what's that, about 135.80s, 135.90s, so you've got 10 pips there. And I'm personally just looking at 136, to be honest. It's just to keep it nice and simple. But you can see, even on this 4-hour chart, the moving average has been working very nicely. It's just 50 SMA has been capping for some time now, for the last sort of couple of weeks, really. So keep an eye on that, but it does look like it is sort of basing around here. I'd not be surprised to see some sort of profit taking here on euro. And you see 1-hour chart is quite choppy as well. So, but in terms of intraday stuff, there's definitely some interesting moves out there in the markets. Mostly off this 136. If you're looking for a key support, that's the one to keep an eye out for. Cable on the weekly, it's still in sort of grind high mode, but you can see the last sort of few weeks we have started to come off the highs, and has been sort of retrace mode. But last week's weekly candle, you have to keep in mind there is a significant amount of lower wick on that, so buyers are still trying to prop it up. And interestingly, this fib move here is that recent sort of swing low to swing high there, nice uptrend, retrace down to the sort of 50% zone. We had a weekly close above last week, and you can already see this week we've come back down, tested this 50% a bit, and it's starting to pop up. So I mean, we'll not be surprised to see another sort of stab at these highs over the next couple of weeks. But I still think the bigger picture is due a retrace. But that will be dependent on the data this week. But in terms of the technicals, well, it looks like it just wants to keep them grinding high this week, to be honest, on the weekly. But that lower wick, I think, was very important last week. And in terms of the daily chart, what fib were we speaking about? We're speaking about this one here. Nice uptrend, retrace down to the sort of 100-day moving average, nice pop up, and you see the 50% is acting as nice support. So looks like, well, it's currently popping today. I would not be surprised to see it test this 50-day moving average this week. Keep an eye on that. In terms of sort of the sellers on this daily chart, remember we were speaking about this was one fib move here. Nice and technical, nice spikes at the 61.8, closes below, and we rotated towards the downside. So the next sort of smaller fib, which you can see on the sort of 4-hour chart as well, with this one here. So that's taking the high from that high of where we bounced at that 61.8, and you can see it's 50% coincides with a nice round number being the 168 handle, and also it coincides with the 50-day moving average as well there. So that's a nice sort of setup. If we start to bounce up there, then keep an eye out on that one. And you can see it's the same on the sort of 4-hour chart as well there. We've got the 100 SMA line up as well there on the 4-hour chart. And that fit can be seen from the 1-hour as well if you zoom out. Dollar Swiss, what we've been speaking about for the last sort of few weeks, well, opposite to euro, remember, they've been doing sort of mirror image charts for some time. We have the double top on euro dollar, and on this dollar Swiss we have this lovely double bottom at the 0.87 handle, pretty much to the pip there. Lovely reversal candle, and the last few weeks it's just been in grind higher mode. So this week I would not be surprised to see it test this 50-day moving average. If we get some strong US data out this week, so for example an NFP on Friday, then I think we'll definitely see that get tested there. In terms of the fibs that we've been looking at, so we've been looking at the fib from the sort of the high of the year to the low. We initially had some sellers coming at the 50% and capping it. Then we've had this double bottom come up, and then we can see we're just currently sitting around the 61.8% retrace here. So keep an eye out on how that reacts. You can see that there on the daily. We've in fact had a daily close above that, so you can already see in terms of today's candle that we've already come down, tested this 61.8. You can see it's trying to hold above, so odds for me, I think that we're going to keep on grinding higher. I mean, especially this is a double bottom as well, so fibs in terms of double bottoms and double tops don't tend to hold as well, in my opinion. So I think we'll continue to keep on grinding higher. Of course, this 200-day moving average we've been speaking about for the last sort of few weeks. We came up testing it. You can see we've closed above now this 200-day, and it's now acting as key support. So all the signs are pointing towards the upside, I think, here on dollar Swiss in terms of the next sort of few weeks. Well, of course, this week as well. And in terms of shorter term stuff, it's a slightly trickier on the sort of the 4-hour, 1-hour chart. I mean, in terms of the 1 hour, if we start to get any retracement towards the downside, this will be one fib to keep an eye out for. You can see we've already got some previous sort of support here at the 50% retracement, which comes at 0.8964 there. So keep an eye on that. That could be quite interesting. That's the same sort of 30-minute chart as well there. So that's pretty much it in terms of the shorter term stuff. And then again, just keep an eye on the sort of round numbers, see how they react. Aussie dollar in terms of the weekly here, it's still just chopping around really. Last sort of 8-9 weeks, it's just chopping in between the sort of 200 pip range. So you've got the 0.94 handle there, and then you've got the 0.82, not 82, 92 around there. So you can see last 3, 4, 5, yeah, pretty much 8 weeks there. It's just been chopping in between this range. Still currently above the 50-week moving average. But you can see last week's weekly candle is a nice sort of reversal candle there, a nice bit of lower wick, nice green body. So odds I'd say for this week will be towards the upside. But of course, you can easily come up and test this 94 handle and then reverse back down. But I still say the odds are towards the sort of upside here. If we do get a retracement towards the downside heavily this week, then that's still the fib to keep an eye out for in terms of this weekly chart. You can see we had previous resistance at this 50%, so that could act as new support. In terms of the daily chart, you can see there, nice and clear. It's all about this sort of 200 pip range. I think you can see we got capped at the 50-day moving average as well there last week. So keep an eye on that. And that was previous support around here as well. Remember. In terms of the sort of 4-hour chart, I had some lovely basing around here just above this 92 handle. So you're talking about 0.9212s there. Some lovely candle action there, nice lower wicks, nice reversals, and just popping up here. So yeah, for me on Aussie, nothing major of interest apart from these clear sort of support and resistance. That's one fib to potentially keep an eye out for. Well, yeah, because I remember speaking, the last sort of few weeks, we're looking at this fib here, remember. Had some nice sort of sellers coming in, I think that was a 78.6 actually. And then if you look at it in terms of fibs, then that was the next one to look out for. So you're taking the high of where we bounced down, and you can see we sort of stalled at this 50%, 61.8% level. But they're not the purest of fibs, but it's just one to keep an eye out for if you're looking for a sort of mid-range. But the easier thing to do is just look at it in terms of a round number and just call it the 0.93s. That's the easier way to look at it, I think. Gold in terms of the weekly, it's been very interesting for the last sort of few weeks, and we finally had a breakout here. So you got the fib from pretty much the low of the year. Well, it was actually the end of last year, towards this high here. In fact, I'll flip it to the daily so it's a bit clearer to see. And we had this sort of triangular formation, which was just kept on chopping and chopping around. And there was some lovely supports, remember, so you had pretty well 1280s and 1270s, etc. All sort of holding multiple tests. I mean, I'm surprised it broke down. It broke down last week. I thought it would have broken towards the upside, purely in terms of the lower wicks, but no, it did. It significantly broke down, like with that big daily candle there. In fact, it did close above the 61.8. But no, very, very heavy, and it's just trickling down and down. It's starting to slow down. On this gold chart, you can see we are starting to stall, and I think, yeah, it's pretty much the 1240s. So in terms of support going into the week, that's definitely one there. Well, 1240s, 1241s, I think. Yeah, you can see there. I should delete these previous supports as well. So I mean, yeah, that's what happened last week. We broke down off this triangular formation. Well, I suppose what can go up must come down, and we had that break of the trend line, and we significantly sold off. So, but you can see last sort of few days. Well, yesterday we had a nice bit of lower wick there, and today we've already formed a nice lower wick, and we've got a green body. So if it closes like it is now, I would not be surprised to see a nice sort of retracement towards the upside. In terms of fibs, nothing really pointing out. I mean, a lot of people I'd have thought would be taking that sort of high there, and that low, and any sort of retracement up. So the 50% comes at 1267s there. But I personally sort of look at it in terms of the moving averages. So if we come up here, see what happens at the 200-day moving average. That's of course if we do get up there. So if we have a weak sort of NFP on Friday, then keep an eye out on that. But I think it's all about just playing the sort of round numbers and playing the key supports. So in terms of the sort of 4 hour, you can see 1243s key support. In fact, I'd delete this sort of 1240 and 1241. That's the key support there, 1243. Definitely on that 4 hour. Multiple tests, multiple pierces below, and multiple closes above that. And you can see this previous 4 hour candle was nice and bullish. So I'd definitely not be surprised to see a rotation towards the upside over the rest of the day, or tomorrow, or well, next sort of couple of days as well. Okay, then that's all for today. I hope you found that video useful. If there's any other pairs that you want me to have a look at next week, then feel free to comment under our YouTube channel, which is AGM Markets, or our Twitter feed, which is at AGM Markets. Hope you have a great rest of the week trading. Keep an eye on that data. It should be quite a volatile and interesting week. Yeah, I'll catch you next week. Thanks for watching.